there are certain things which you must do before 31st March 2023 in order to save you lots of tax and lots of penalties. So we are going to discuss about 7 such things which will help you in reducing your taxes and save you from penalties. Number 1. Linking of your PAN with your Aadhaar. It's very important because this had been announced by the government long time ago, and you were supposed to link your PAN with your Aadhaar. If you have not done it, please do it before 31st March. Otherwise, your PAN will become inoperative and you will not be able to utilize it, use your PAN, and will be restricted to do many transactions. You won't be able to file your income tax return. Your returns are not going to be processed by the income tax department. So if you have any refund pending, you won't be able to get that refund. Number 2, if you have not filed your income tax return for the financial year 2019-20, then you must file it as an updated return before 31st March 2023. Or if you have missed reporting any income in your income tax return for the financial year 19-20, you must file the updated return and pay the due taxes. Number 3, payment of advance tax. If you have not paid the advance tax, then you must pay it before 31st March 2023 in order to avoid heavy amount of interest. Because as per the income tax rules, if you have a tax liability of more than 10,000 in a particular financial year, then you are supposed to pay advance tax. Number 4, if you are supposed to make any tax saving, you must save your tax. You must make your investments like LIC, NSC, PPF, etc., etc. So 31st March is the last day to make the payment for those investments in order to save taxes. Number 5, tax saving insurance. The government in this budget 2023 has come out with a clarification, rather an amendment, that if you make investments in an insurance policy, the premium of which is more than 5 lakh, rather 5 lakh or more, then you are going to be taxed on the redemption whenever the maturity proceeds are received from this insurance policy. Therefore, if you want to make any investment in such a high insurance, then you must do it before 31st March 2023 so that whenever you get the redemption, that will be totally tax-free under section 1010T. Number 6, tax gain harvesting. So this is very interesting. If you have any equity funds investment, or if you have investment in shares, then what you can do, if you feel that there are some gains in those funds or equity shares, especially the long-term capital gain is there, then you can sell them off and realize the amount and report that long-term capital gain in your income tax return up to a limit of 1 lakh rupees, because up to 1 lakh of rupees the long-term capital gain is exempt in a financial year. So you can utilize that threshold limit without paying any taxes, and then you can reinvest that amount again in those funds or shares wherever you feel that further growth is possible. So this way you will be able to utilize the threshold limit which is available in the income tax. Number 7, form number 12B. Form number 12B is required to be submitted to your employer if you have changed your job, so that whatever the tax liability is determined after clubbing of both the salary income, you can pay the TDS on that. The employer can deduct TDS so that you don't have to pay the liability at the end of the year, rather at the time of filing of the income tax return. So these are the simple ways that you must do in order to save heavy taxes and penalties before 31st of March. If you find this video useful, please press the like button, subscribe to our channel, consider sharing this video, and click the alert notification. Thank you. Goodbye for now.